Today we're going to be talking about PPOR, or your main residence, and why it's important in lending. So firstly, what are we talking about? The principal place of residence, PPOR, or sometimes referred to as your main residence, is basically important for three reasons. It's important because it has an impact on tax, it's important because it has an impact on duties, and it has an impact on lending. So to break it down super easily for you, and again, this is not tax advice. If you need tax advice, go and speak to a specialist. But your principal place of residence, or your main residence, will be treated differently from a tax perspective. Most simply put, if you live in the place and you sell the place, you're not going to pay capital gains on the place. Now, if you move out of it, it might actually still be considered to be your main residence from a tax purpose for up to 6 years. Again, consult your tax professional. So if you're living in a place, adding a bunch of value to a place and then selling it, it can actually be a great way of generating wealth without having to pay tax on those capital gains. Now, from a duties perspective, if you are living in the place or intending to live in the place, then it impacts stamp duty. So obviously for first home buyers, if they're planning to live in the place, then in some cases, depending on the state, depending on how much they're spending, then they're going to find that stamp duty is either reduced or even no stamp duty at all. But even if it's a subsequent house purchase, not your first time purchase, the fact that you're planning to live in it or planning to use it as an investment actually will have an impact on the duties depending on which state you're in. And last but not least, whether it's a principal place of residence or your main residence actually impact lending as well. Lenders will typically charge more, in fact in almost all cases will charge more for investors. So if you're living in the place or planning to live in the place, then declaring it as being your principal place of residence, or the fact that you plan to be what you might hear as owner occupied, is going to actually give you access to cheaper rates across the board, not just for the interest rate, but even things like lender's mortgage insurance. So there you go, PPOR, your main residence, tax impact, duties impact, and lending impact. Make sure you have a chat to a broker before you make any decisions.